today we're going to be focusing on the key trends that we're seeing in equity markets and the latest economic data coming through in Europe. Over the last 24 hours, there's been very little key economic data points that's really of note and that's really influencing financial markets. So I think it's worth taking a step back and looking at the key trends within equity markets that we've been seeing. I think it's worth just reflecting on the year-to-date numbers, which have been exceptional. World equities up 10%. And if we think about the US market that often gets the headlines, that's up 12% so far year to date. But what's quite impressive as well is just the breadth of equity returns. So if we look at Japan, their market's up 17%. European equities actually outperforming the US, up 14%. So equity investors and multi-asset investors have been rewarded by being invested. I think what's encouraging for equity markets and investors in general is just the ongoing resilience within the US economy, but more recently seeing stronger economic data coming outside of the US. In addition, whilst inflation has been slightly more stickier than initially thought compared to at the start of the year, markets are still expecting interest rate cuts to come through from around the world, and that should be encouraging for financial markets going forward. Outside of that, we've also got this underlying theme and enthusiasm for artificial intelligence. We heard from Matt last week talking about Nvidia. They reported on Wednesday delivering better than expected profits and guided for stronger sales growth than initially thought for the second quarter, and that's really fueled the technology sector. We've seen stronger returns. The tech sector in the US is up 3% since last Wednesday. Nvidia up 20% since last Wednesday. And that's really supporting the US equity market, whilst we're seeing a little bit of weakness over the last week outside of the US. But really, for global multi-asset investors, this differentiated opportunity set remains advantageous. Away from markets, if we think about economic data in Europe, we are continuing to see encouraging growth data. So last week we had better business activity within services and within manufacturing, and that continues to firm the growth momentum that we've been seeing over the last few weeks and months. I think it's important to also reflect on the wage growth data that came out of Europe last week. We saw a re-acceleration from wage growth going from 4.5% to 4.7% in the first quarter of this year. And that should really support consumption going forward and continue to help the European economy grow as it is today. However, it does suggest, with wages being stronger than expected, that the underlying inflation pressures are stronger than initially thought and would challenge interest rate cuts this year. The European Central Bank, its members, have been quick to comment on this data, highlighting that this is due to one-offs in Germany really, and that the overall wage growth dynamic, looking at other measures, is actually suggesting that interest rate cuts in June are appropriate. That's everything from us today. Thank you for watching, and we'll see you tomorrow.